adjusted earnings per share, 89 cents. That is above the 84 cents that was estimated. No surprise there. Gross margin, adjusted gross margin at 73.5%. In line with estimates here. Revenue $39.3 billion. That's above the $38.25 billion that was estimated here. And that breaks down to $35.6 billion in data center, above estimates. Gaming revenue of $2.5 billion, which is below estimates here. Looking at some of the first quarter numbers here, we have $43 billion is the company's forecast for first quarter revenue, plus or minus 2%. The estimate was for $42.3 billion here, so giving them some room. And in the statement talking about the demand for Blackwell is amazing. That is something that we have heard from them before. And there is now ramped up massive scale production of Blackwell AI that the company has successfully ramped up that production. That is what we have been looking for. Here's something, though, that we should highlight for you. The first quarter adjusted gross margin forecast from the company, 70.5% to 71.5%. Analysts on average had been looking for 72.1%. So of what I am seeing here, that's the first thing that I'm seeing where there might be a little scope for disappointment. The share's kind of bouncing around here as investors try to figure out what to make of it. But before we figure out what to make of it, we're going to find out what Josh and Saz make of it here.
The margins are really interesting,
yeah.
Because for Q4 they hit the bogey the street was looking for. It sounds like, and you know, I was listening to longtime tech analyst Gene Munster, who was talking about the margins. He said, "Listen, they got to hit 73. That was the mark they had to hit, and then they did hit that." The forecast in terms of what they're looking on ahead, though, I think is also interesting. That's going to come up on the call immediately. What are the puts and takes that go into that, Joe?
Immediately, my head is thinking right now, earnings call by Jensen. I think he's going to look to eviscerate the bears. He's got a revenue beat at his hands. He's got an earnings beat. He's got what looks to be better than expected first quarter revenue guidance. These are very powerful things. So I'm expecting Jensen to get on this call very, very bullish. I think this margin guide down or disappointing margin that you called out, Julie, which was right on the mark, is expected. I think the street was looking for a squishy, a little bit of a disappointing margin out for the first quarter as Blackwell starts to ramp up. This quarter, by and large, looks good. Right now, I'm thinking bullish earnings call from Nvidia. I'm also now starting to think about a lot of these trades, AI trades, tomorrow morning that could get us some tailwinds if Jensen nails this earnings call like I'm thinking.
Well, right now the stock is down 4%. So I don't know. You know, he may want to eviscerate the bears. It doesn't mean he's.
Well, I think it's the margin. I think it's the margin. I think it's the margin
yeah.
call, Julie. I think that's very important. I mean, I would argue the street really expected this. Keep in mind, you've had Nvidia shares underperform the S&P 500 by 7% the last month. So the street expected, I think, some weakness in that first quarter guidance. What I would say they didn't expect is that revenue beat. And that's a good revenue beat and
of course they expected the revenue beat. Come
look,
on.
The stock has been underperforming into this quarter. They were concerned if they were concerned about an inline quarter, top and bottom line, also concerned about that first quarter
If you
guidance.
didn't get a revenue beat, the stock would be down a lot more. I mean, if Nvidia doesn't beat on revenue, like the sun is not shining, the sun is gone
Look
dark.
at the other side of this.
What?
Look what we're seeing from Salesforce tonight. I mean, they whiffed completely. I mean, the stock's getting hammered.
Comments from Jensen Huang, by the way, I just want to bring in here. Demand for Blackwell is amazing, he says, as reasoning AI adds another scaling law. Going on to say increasing compute for training makes models smarter, and increasing compute for long thinking makes the answers smarter. Time now to check in on the chip market reaction following NVIDIA's fourth quarter results. Yahoo Finance's Jared Blickery joins us now with the very latest. Jared.
Thank you, Josh. Somewhat of a muted reaction. You're going to see results here down 41 basis points. That's 0.4% since the close today. And you can see NVIDIA stock was up 3.67% only today. I'm going to show you a 3-day chart. So this is what happened this week. And I'm going to draw on here by hand where we saw the after hours high and low. Up by 136 was about the high and 128 was the low. So pretty muted when you consider the price action of this week. And if you recall my hit from just about 30 minutes ago, we were looking at a move of potentially 10%. At least that's what the options market was pricing into it. And of course, we have all day tomorrow as well. That 10% measures everything into the close the following day. So that is the 27th, Thursday. I'll just show you the year-to-date price action. and kind of talk about what Nvidia has done historically. This is a very much sideways chart. And even over the last year, we haven't seen the meteoric rises that we are accustomed to seeing with Nvidia over this 2.5-year bull market. So things have slowed a bit. And let me just show you the last 3 years, and you can see some of these big run-ups that we've had before, and really just kind of stalling out over the last 3/4 of a year. And so what does the future hold here? Difficult to say, but nevertheless, we have a pretty big trading range, and you got to think that we'll be testing at least one end of it within the next few days. Julie?
Jared, thank you.